So I'm sharing my screen and I will walk through the chapter 9. So chapter 9, we will see about payment of premiums, how the premiums are being paid. Surrender. Surrender is something, you know, when you don't want to policy, you return the policy to the insurance company itself and they will pay you some amount. I think, can you able to see my screen and you can able to hear my voice clearly, right? Is there any
Yes, sir.
disturbance?
No.
Okay, great. Thank you. So lapsed policy means if you are not paying the premium on time, the policy will get lapsed. So that is called lapsed policy. And revival. Revival is after lapsing, how we can renew the policy. How we can make the policy live again. So these are the four things that we are going to see in this chapter. Very straightforward chapters. Minimal calculation. So factors in calculation, the tabular premium. Tabular premium is, the premium that you are going to pay for an insurance company. Okay. So the tabular premium will have, so what are the factors we consider when you are calculating the premium? Age, sex, occupation, habits, health conditions, and family history. All this we know because most of you are working in this summarization underwriting industry, and we should know, what are the basic criterias they will use to calculate the premium. So age, how age influence the premium. If you are a younger age person, less premium, higher age person, higher premium because the risk is increased. Younger age, you know, risk of dying is less. The older age, the risk of dying is higher. So higher premium. Sex, female gender usually lives, the average mortality rate for a female gender is higher than the male gender. So usually for female gender, it's favorable. They will charge lower rates. Male gender, they will charge higher rates. Occupation, hazardous occupation. You know, if you are working if you are working as an fighter pilot, if you are working in, you know, in a mines, if you are working in explosives industry, if you are working in as a, you know, in an company where the risk of dying is very high. For example, if you are working in highly dangerous, handling highly dangerous chemicals, those are all like risky occupations. So risky occupation, the risk of death is high. So they will charge higher premium or extra premium compared to normal occupations. So habits. So tobacco and alcohol are direct linked have a direct link to death. So they will charge extra premium if you are a tobacco user or a alcohol user. Health conditions. So this we already know. If you don't have any health issues, no extra premium. If you have any kind of health issues like diabetes, hypertension, heart disease, already you are in risk. So they will charge extra premium or they will decline the policy. They won't give the policy. So family history. There are some hereditary diseases which travel along the family. So if you have a hereditary disease in family history, they will charge extra premium. So these are the factors which influence the tabular premium. So next we'll see about lapsed policy or paid up policy. Paid up policy is a separate thing. We'll see about lapsed policy. What is policy lapsing? Policy lapsing is policy is getting closed because you are not paying the premium, like your mobile connection. If you are having prepaid connection or postpaid connection, if you're not recharging or if you're not paying the bill, they will stop the plan. You cannot make calls. So that is called lapsing. So like insurance also, you need to pay the premium regularly. If you have chosen yearly premium or half-yearly premium, whatever it is, you need to pay it. If you are not paying it regularly, if you miss to pay it, they will give some grace time. So this grace time is very important in exam perspective. They will ask question. 30 days grace time for non-monthly payments. Non-monthly payments is quarterly, half-yearly or annual. If you are paying the premium quarterly, annually or half-yearly, 30 days is your grace period. For example, if today is the last date for paying the premium, 20th of May. So they will wait till 20th of June. Okay. So if you are paying within this grace period, the policy won't lapse. Otherwise, the policy will get closed. So 15 days for monthly premium mode. If you are paying every month as a premium, so today is the last date for premium payment. They will wait till 15 days. That is June 5th. After that, the policy will get lapsed. So this is called grace period. So grace period is 30 days for non-monthly and 15 days for monthly. So what happens after once the policy is closed, lapsed? There are some policy with no surrender value. No surrender value means like pure term policy, which covers only the death. Those are all like pure term policy. They don't have surrender values. If you are not paying your premium, the policy gets lapsed. It gets terminated and nothing will, the insurance company will give nothing to you back. All the premiums that you have paid is gone. So this is for no surrender value policy. So there are policy which has surrender value. All endowment policy or money back policy or bonus policies will have surrender value. Surrender value means if the policy is getting closed, there is some amount accumulated in your account, in your policy account. They will pay you back that one. So that is called surrender value. Okay. So if the policy has surrender value, what happens to the policy? It won't get closed. It becomes a paid up policy. So this is a very important term, paid up policy. Paid up policy means the policy will not get closed. It will get reduced. The amount, face amount will get reduced and it will continue. For example, I have taken 10 years of money back policy. I have paid the premium for 3 years. So minimum 3 years should be paid. Minimum 3 years. That is IRDAI rule. Minimum 3 years pay பண்ணாதான் அது வந்து surrender value இருக்கும், paid up policy இருக்கும். Less than 3 years முன்னாடியே lapse பண்ணிட்டீங்கன்னா, even for bonus policy, there is no return. Okay. So lock-in period for insurance is minimum 3 years. Okay. Now let's understand our example. 10 lakh rupees for 10 years money back insurance. I have kept it. I have paid for 1 lakh rupees premium every year I am paying. After 3 years, I left the policy. I forgot the policy and it is got closed. I have paid 3 years of premium, 3 lakh rupees. Now what will happen? The policy will continue for 10 years, but the face amount, instead of 10 lakhs, it will get reduced to 3 lakhs. So 3 lakhs of face amount குறைச்சிட்டு நீங்க premium pay பண்ண தேவையில்லை, but it will continue for 10 years coverage risk. So this is called paid up policy. Okay. Any questions in paid up policy? No questions? Okay. So this is an important question. 30 days, 15 days and paid up policy. We'll see the paid up policy separately with some examples. So paid up policy has, the value is called paid up value. After 3 years or 4 years, when the policy is getting closed, whatever amount they are changing the face amount, that is called paid up value. So 10 lakh என்ற அந்த face amount எவ்வளவு amount மாறுது, that's called paid up value. So there is a formula to calculate paid up value. Okay. So what is paid up value? Paid up is value is equal to premium paid. Whatever premium you paid divided by total number of premiums payable total. Okay. Into original sum assured. So this is the formula. So for example, if the original sum assured is 8 lakhs, total premium payable is 20 premiums. You need to pay 20 premiums. So now you have paid only 5 premiums. How they will calculate is 5 divided by 20 into 8 lakhs. So 5 divided by 20 into 8 lakhs is equal to 2 lakhs. Now the paid up value is for this policy is 2 lakhs. So 5 premium கட்டிட்டு நீங்க விட்டுட்டீங்கன்னா the policy will continue for 20 premiums. 20 premiums ன்றது it may be half yearly or early premium கணக்கு வச்சீங்கன்னா 20 years it will continue. Instead of 8 lakhs, the face amount will get reduced to 2 lakhs. So this is called paid up value, PUV. This is again an exam question. Okay. So policy continues as a paid up with reduced face amount. No further premium required. Nothing. The policy will continue. So bonuses already vested or retained. ஏற்கனவே bonus அதில் add பண்ணியிருந்தாங்கன்னா, for example, in this, the bonus is not added. If they added some bonus like 10,000 rupees or 20,000 rupees, that will also be the add to the paid up value. So if you have any riders like accidental death benefit rider, or if you have some critical illness rider, all this rider which does not require a paid up value, it will get terminated. Only the insurance, main insurance will continue. The other insurance will get terminated. Okay. Any question in paid up policy? Great. Surrender value. So now we have seen paid up. Paid up is lapsed policy. அதாவது நம்ம premium கட்டாம விட்டு lapse ஆகிறது. Surrender value is different from lapsing, but same kind. It is getting terminated. அதாவது the difference is we are voluntarily closing it. Surrender value is we are going and voluntarily closing the policy, so that we are saying I don't want to continue the policy. இதை க்ளோஸ் பண்ணிட்டு எனக்கு அமௌண்ட்டை செட்டில் பண்ணிடுங்கன்னு சொல்றோம். So that is called surrender value. It is not a paid up policy. Okay. So amount payable if the policy holder voluntarily terminates the policy before maturity. We are closing it. Bank account close பண்ற மாதிரி we are closing it. So surrender value only available if minimum premium paid. Usually IRDA rules வந்து 3 years. Lapseக்கும் 3 years தான், surrender valuesக்கும் 3 years தான். Okay, so there are 2 types of surrender values. Okay, and the insurance company will pay the highest of that surrender value. இந்த ரெண்டு டைப்ல எது வந்து highest amount உங்களுக்கு வருதோ அதை தான் பே பண்ணுவாங்க. So what are the 2 types of surrender value? One is guaranteed surrender value. Another one is special surrender value. Okay, so guaranteed surrender value is insurance company. All insurance companies should follow the rules of IRDA. So IRDA has given some set of rules. First year lapse na இவ்வளோ surrender value இருக்கணும். Second year lapse means this much of surrender value. Third year lapse means this much of surrender value. They have kept some rules. So the insurance company should follow the rules. So the GSV table, second year policy lapse, policy, if they are closing, 30% of premium should be paid. For example, 1 lakh premium நீங்க பே பண்ணிருக்கீங்கன்னா second year close பண்றீங்கன்னா 30,000 they will return you. 70,000 they won't return. So this is pre-closure. If a loan alla pre-close பண்ற மாதிரி. So they will charge additional amount. Third year premium is 35%. Fourth to seventh year means 50%. Eighth year means as per F&U application. Okay, whatever the application they say, as per the company rules, each insurance company, they have the difference of different calculation after 8 years. The last 2 years of policy, if it is getting lapsed, 90% of premium paid. So one important exam question is always they are asking repeatedly, what is the second year policy GSV value? It is 30%. Don't forget that 30% is the GSV value for second year policy surrender. Same like lapses, riders also do not recover surrender value. Okay, so they don't give back the premium paid for the riders. So surrender value is only for the main policy. And all policy have both GSV, guaranteed surrender value, special surrender value, except term insurance, health insurance, and immediate annuity insurance. So these are all like type of policy which does not have surrender value. Term insurance, I already told you, it covers pure death, no bonus. So lapse ஆயிடுச்சுனாலும் surrender பண்ணாலும் they won't return anything. So health insurance is usually 1 year insurance. So no surrender. Immediate annuity insurance is இன்னைக்கு நான் ஒரு அமௌண்ட் பே பண்றேன், நெக்ஸ்ட் இயர்ல இருந்து நான் வந்து அவங்க கிட்ட இருந்து பென்ஷன் கேட்கறேன். So it is very limited period. First year, second year pension. This is immediate annuity. So immediate annuity also does not have surrender. Surrender is applicable for policies which goes for a longer period. Okay. So let's see about special surrender value. Special surrender value is paid up value plus bonus. That is equal to SSV, special surrender value. This is usually higher than GSW. Okay, GSW is, sorry, GSV. GSV is guaranteed surrender value. We see a calculation for better understanding. Okay, let's assume I have a policy of 10 lakh rupees. The policy term is 20 years. The premium is 50,000 annually. 1 year I need to pay 50,000 rupees. I have paid for 5 years. That means I have crossed a 3-year lock-in period. 3 years முடிஞ்சிச்சு, so surrender value applicable. So total premium paid is 50,000 per year. 5 years pay பண்ணிருக்கேன். So 2,50,000. So I have got some bonus also. Bonus accumulated is 40,000 rupees bonus is there. No survival benefit paid. Survival benefit is if they paid me any bonus, that they will reduce it from the policy. So no survival benefit is there. So it's very simple calculation. First step, you need to calculate the PUV, paid up value. Paid up value is very simple. Number of years you have paid, okay, divided by how many total number of terms into face amount. So 5 years I have paid 20,000, 20 years I need to pay total term into 10 lakh. So that is equal to 2,50,000. If you calculate by total premium also, it is equal to 2,50,000. Just for easy understanding purpose, I have kept this calculation. It is little complicated, but this is very simple. So paid up value is 2.5 lakhs. The first step calculation is done. The second step, I am going to calculate guaranteed surrender value, GSV. So GSV is, okay. So let's see what is the GSV for 5th year policy. 5th year policy GSV is 50% of the premium paid. So what is the premium I have paid? 2 lakh, 2.5 lakhs. So 50% of the 2.5 lakhs is 1.25 lakhs. So this is the guaranteed surrender value. They are going to give it to me. Okay. Special surrender value. Let's calculate special surrender value. So we need to assume one percentage. I am assuming the discount factor. So discount factor is given in the policy for every policy for SSV. So SSV discount factor for my policy, I'm assuming it as 80%. It changes with every insurance company. Okay, it is not fixed. As an example, I am taking that as a 80%. Okay. So now, what is SSV? SSV is paid up value. Paid up value is 2.5 lakhs. What is bonus? 40,000. So 2.9 lakhs. Okay. Into discount factor. So discount factor is 80%. So 2.5 lakhs plus 40K into 80%. That is 2 lakh 32,000 is a surrender value if I calculate via special surrender value. So which is higher? GSV is 1.25, SSV is 2.32. The highest is SSV. So the policy holder will receive the highest of the value 2.32 lakhs as a surrender value. If you surrender the policy, immediately insurance company will pay you 2.32 lakhs. If you are not surrendering, if you are leaving the policy as it is, this paid up value 2.5 lakhs. So the face amount will change to 2.5 lakhs and it will continue throughout the next 15 years. Your policy will be live. So this is lapsing. Paid up. If you lapse it, it will become paid up value. Nim cost katam vettangna paid up policy amarino 20 varshathukku it will be live. It will cover whatever whatever purpose you have taken. Surrender pandringina, you won't get 2.5 lakhs, but you will get less 2.32 lakhs, but immediately they will pay it to your hands. So this is the difference between lapse, paid up policy and surrender value. Any questions so far? Anything I need to repeat? It's a very small chapter. Next one is also small chapter. We have a lot of time. So if you have any questions, you can ask. If I'm going fast, you can ask me to stop because you need to understand. That is the main aim. Okay, revival. What is revival? Revival is getting back the policy to live. That is called revival. Or policy lapse ஆயிடுச்சு. Now I want to continue the policy again. Yes, you can continue the policy. The time the IRDA has given is 5 years. Within 5 years from the last premium lapse date. For example, today is my last premium lapse date, means 25/2026. The policy lapsed. I can revive the policy before 19th May 2031. 5 years. I can revive the policy. But there are some methods. Okay. So there are 5 methods how I can revive the policy. Lapse on a policy, திருப்பி உயிர் கொடுக்கிறோம். So ordinary revival. Ordinary revival means, for example, policy lapsed last year. Now I want to revive it. So I need to pay the premium. எத்தனை premium மிஸ் பண்ணியிருக்கணும் அத்தனை premium I need to pay. plus on the premium on interest. For example, 10,000 rupees premium means plus interest. Interest is or 5% வச்சுக்கலாம். So 10,000 rupees plus 5% interest, 500 rupees. I need to pay to the insurance company to start again the same insurance. But sometimes they will ask for evidence of insurability. Evidence of insurability is evidence of health. They will, you need to submit your medical records again. They will check it. Then only they will approve your revival. Because let's take an example. Or 5 years முன்னாடி I just made my policy lapse. After 4 years, I want to start again. அவங்களுக்கு ஒரு doubt வரும் insurance company. Why this person is after 4 years, why you want to start again? There may be some adverse change in his health. அவங்களுக்கு வேற ஏதாவது disease வந்திருக்கலாம். அவங்க சாகர நிலைமையில போயிருக்கலாம். So they want to make benefit out of insurance just by reviving the policy. So to make sure that those adverse selections are not happening, the insurance company will check your medical records before you are reviving the policy. So that is called ordinary revival. Simple revival means no doubts by the insurance company. No doubts. So 20 years policy இருக்கு. I have taken 20 years policy. 15 years I pay the premium. 1 year I went out of country. I forgot to pay. 16th year I came back. I forgot to pay. 17th year I am saying I went out of country. I forgot to pay. So please revive my policy. So 15 வருஷம் அவங்க வந்து பாலிசி வச்சிருந்திருக்காங்க. Just ஒரு simple reasonக்காக they forgot to pay. This is simple lapse. Very simple lapse. No question of cheating. So those short lapses, only arrear you need to pay. The arrear premium plus interest you need to pay. No need for medical exam. Because it's clearly visible that you want to continue the policy. Because 20 years policy, 15 years you already paid. So they won't ask for medical exam. Revival by installment. So you have, see, yearly premium is 1 year, 1 lakh rupees. So you didn't pay the premium for 4 years. Now you want to revive the premium, revive the policy. But you don't have 4 lakh rupees. You're saying to the insurance company, please revive it. But this 4 lakh rupees, I will pay it in installment. So this is called revival by installment. Special revival. Special revival is they will change the policy start date itself. உனக்கும் வேணாம் எனக்கும் வேணாம் policy revive பண்ணலாம். But instead of starting the policy from beginning, I'll put the policy start date as today. For example, 20 years policy இருக்கு. I have started the policy in 2021. I paid till 2024. Now 20 years policy means till 2040 I need to pay 2040. Now I lapse the policy. In 2026 I am asking them to revive it. They are saying, okay, let's start over again. Fresh start பண்ணிக்கலாம். 2021 policy வந்து போனதாவே இருக்கட்டும். We'll start the policy with new date 2026. ஆனா இதுல இருந்து 20 years வைக்க வேணாம். We'll keep the same period 14 years till 2040 you need to pay. So this is called special revival. So policy date will be shifted forward. Okay. The in between the insurance, in between the premium whatever got lapsed, no need to pay. 4 lakhs rupees டக்குன்னு pay பண்ண முடியாது இல்லையா? So they are saying 4 lakhs நீயும் pay பண்ண வேணாம். நானும் வந்து கேட்கல. Instead, we'll change the date to new date, today's date, with reduced period. 20 years period பதில் we'll keeping 14 years period. So this is called special revival. Loan come revival is you don't have 4 lakh rupees. You're taking loan on the policy itself and paying the premium from the policy. This is called loan cum revival. பாலிசியை வச்சு லோன் எடுத்து அந்த லோனை வச்சு பாலிசி ப்ரீமியம் பே பண்ணீங்கன்னா that is called loan cum revival. That's all on this chapter. Any questions? Simple, straightforward, but lot of points are there to remember. You need to remember a lot of things. If you have any questions, you can ask.